Hello, everyone. Good afternoon and welcome to today's episode of Modesty's Property Corner, Season 1, Episode number 20. I remain your man, Ikenna Ume Izudike. I'm the Director of Modesty's Property Consultants Limited. We are an estate agency based in Luton, the small town of Luton, doing mighty things in Bedfordshire. And we bring you this every Wednesday midday, just a way of interacting with you, communicating with you, educating, enlightening, updating you, and just having a feel of a relationship between us and our clients, our fans, and people who believe in the things that we believe in as well. So this is another opportunity for us to discuss another important property related topic. And this time around, if you're a landlord or if you're an agent, what we're going to be talking about today might appear controversial. It might, everybody might have their different opinions on this, but it's very important that we discuss this, we talk about this, and then we, among all the diverse opinions that exist on this subject matter, we must find a common ground. There must be something that, we agree, or some things that we commonly disagree on this. So on this episode 20 of this Modesty Property Corner, we're going to be talking about credit reports and how it relates to tenants assessment. So we're going to be talking about today is credit report really necessary for tenant assessment? Is credit report really necessary for tenant assessment? So you see, depends on which of the divide of the argument divide you belong to. For the tenants, I'm sure their opinions might be different. For the landlords and for the agents, opinions might be divided as well. But then let's see how we can reach a common ground and how we can objectively analyze and assess this whole issue. So, credit reports, if you are in the UK or most parts of the developed countries or developed world, you will notice that credit report plays a very vital role in financial decision making, especially with credit institutions. When it comes to deciding whether to lend you money or whether to offer you any kind of credit facility at all, your credit report is very essential in the financial institution making that decision, because a lot of information that they need to make that decision is contained in your credit report. So they rely on assessing your credit report and accessing it to be able to decide whether you are credit worthy or not. So what your credit report basically does is to declare you credit worthy or not. Okay, so what exactly are credit reports used for? Financial institutions and lenders and banks and credit institutions, they use credit reports, number one, to gain insights into your financial management ability. They want to know how you've been able to manage previous credit facilities that you have, how you've been able to manage your finances, the bank accounts that you have. Do you have overdrafts on them? And on those overdrafts, have you been paying them as regularly as you should? Your credit cards, how have you been managing them? Your loans, your hire purchases, and other credit engagements that you have. How you've been managing it so far. It gives them an insight into that. Secondly, they also used to have access to your financial and your personal details. They look at your date of birth, your name, your address, and make sure that it matches what you filled in the form. That what is contained in your credit report matches what you have completed in the application form that they've given to you. Now, these financial institutions also use your credit report to have access to your financial history, because they believe that historical financial management will give them an insight into how you are going to manage your relationship with them if they actually give you or offer you that credit line or that credit facility. So they will look at, in the past 6 years, if you have taken out a loan, have you paid it off? Have you been up to date with the payments, or have you defaulted in the payment, or have you been made bankrupt? This history that they have access to them give them an insight into what your behavior is like, what your attitude towards credits are like, How reliable are you when it comes to repaying credit? So that's your financial history assessed. They use it to gain access as well into your debt levels. How indebted are you? You know, how much debt are you? If you are in so much debt, why would they want to give you more money? Why would they want to lend more to you when you already indebted up to this point? So what you have what you have done with them is to say, look at my financial history, and if you're happy with my financial history, then the relationship between you and I will actually mirror what my financial history looks like. So they look at your financial debt levels and decide whether you deserve to have more debts on top of what you have, or whether you have too much enough that you don't deserve to have any more on top of it. They also use it to have information about you that is held publicly. Public information like county court judgments, bankruptcies, and all that. They use it to access that information and to use that information to process the application that you have made, to decide whether that application should be honored or whether that application should be disregarded. So that public information is what they also use it for. Financial organizations as well, they use your credit report to confirm whether you're on the electoral roll. Being on the electoral roll is a big plus for you if you're applying for anything credit, because what it means is that you can easily be identified. You are known to the local authorities. There is actually a human being behind that name, and there is an address that is registered in that name, and they will not look at how long you've been registered on the electoral roll at that address or the previous addresses that you've lived in. So basically, you have proven to them that you exist. Without the electoral roll, you almost look like you do not exist, and your identity is in question. So it helps them to confirm what your identity is. So that is what the financial institutions use credit report for, and why they use credit report to make financial decisions. So we're bringing it to estate agents and landlords. Why do estate agents and landlords need credit reports when they are assessing tenants? Why do they use credit report when they are assessing tenants? You see, when I came to this country newly in 2007, when I came to this country, I've rented a few properties since I came to this country, and this credit report thing is a new phenomenon. It's a new thing. It wasn't there as a 2007, and those days when I came here, you could just walk into any estate agent, say you want to rent a property, they will assess your ability to pay based on your income, based on your earning capacity. They will look at documents that will prove those income, like your pay slips and all that, and once they're happy with that, and they give you the property to rent, and then you could rent a property. Nobody cared about your credit report because your credit report was considered a confidential document. But then recently, credit report became a thing for agents and for landlords. Why is that? So let's look at the few reasons that landlords and estate agents felt that confidential information should be made available to them to actually understand who their tenants are. Why do they need this? So let's look at that. Number one is that estate agents and landlords, or letting agents and landlords, they use the credit reports to assess the affordability of the applicant or the potential tenant based on their financial history. Remember, we said that your credit report will give access to your financial history. It will tell how you've been managing your finances in the past. So what it then means is that the letting agents and the landlords will have access to that financial history, and then they will use it to make decision based on what your financial history has been, and then they will kind of make a projection and say, okay, if you have been managing your credits like this, it means this is how you're going to be managing your rent and your commitments going forward. That's one reason. Another reason they use the credit report, the letting agents and the landlords, is basically to confirm your identity. Remember that financial institutions will use your credit reports to confirm your identity as well. They will use it to confirm that what you put on the form is what is actually on the credit report. As a mortgage advisor, we see this every day. In fact, some lenders will decline the application if one of the names that's on the application doesn't match what is on the credit report. They will decline it until you go to the application and correct it. So estate agents or letting agents and landlords, use your credit report to do the same, just to confirm that the identity is the same thing and that the electoral roll, being on the electoral roll, is also a plus. They also use that to confirm that you're on the electoral roll, whether in your previous address, and just to make sure that you are actually who you say you are. Again, it's the identity argument. They also use your credit report to ascertain the possibility or the propensity of default on your part based on your previous financial management history. So letting agents and some landlords will say, okay, if you have defaulted a few times on your credit cards and your loans, chances are you're going to default on your rent. Whether that is true or not, we're going to come to that later. And then they make a decision based on that, oh, it doesn't look like you're a reliable person because you have been defaulting on your loans. You've got defaults or you've got CCJs, therefore it will reflect who you are or how you're going to manage this relationship, when we rent this property to you. Again, letting agents and landlords, they use these credit reports to identify if you have got any county court judgments. CCJs or county court judgments, it's really a big red flag to some letting agents and to some landlords, because they feel that for you to have that CCJ, something must have gone wrong consistently for a while, and you were unable to manage it, and then it got to the point where it became a CCJ. Again, if that is a true reflection of situations, I'm not sure, but we're going to look at that. But these are the reasons that letting agents and landlords, use credit report to assess tenants. Okay, so why should estate agents or letting agents or landlords not rely on credit reports? Why do we think they should not rely on credit reports? Now, here are a few things that I came up with on why I think estate agents and landlords should not rely on credit reports for tenant assessments. Number one is that house rental agreement is not a credit agreement. Okay? Credit reports, look at the name, credit reports. And then this is a rental agreement, property rental agreement. You are renting a property that you want to live in. You're not actually taking a credit from an institution or from an individual. Okay? You are renting a property, you want to live in that property. So, it's not a credit. There is no real relationship between that and previous credit management history, because it's not a credit arrangement. It is the only resemblance of credit there is that you're going to be paying the rent. Even the rent is paid in advance. It's not even in arrears. So if you're going to be moving into a property, you're paying the rent in advance. So you're not even paying it in arrears. So there is no resemblance of credit arrangement here, because you're not borrowing the money from anybody to actually pay for that credit, for that rent that you're paying. So it's not a credit arrangement. I do not understand why credit reports should form the basis of tenants' assessment when it comes to letting agents, and because it's not a credit arrangement. That's just number one. The other thing I looked at here is the financial history of a potential tenant is not really a clear indication of where the person is presently or where they're going to be tomorrow. Somebody who might have a bad financial past or a poor financial history shouldn't really be denied the opportunity of renting a property when presently their circumstances suggest that they can afford to rent that property. As a mortgage advisor again, a lot of lenders in the mortgage space they are lending to people with poor financial history, as long as their current financial status proves that they can handle the financial commitments of a mortgage. So, if somebody who has a poor financial history commands the trust and the respect of big institutions to lend them so much money to buy a property, believing that their current financial status suggests that they can handle that, why would you, as a letting agent or as a landlord, allow somebody's poor financial history affect or influence your decision to allow the person rent your property? I'm in the process of arranging a mortgage of nearly £700,000 for a client who has a poor credit history. £700,000 for a client who has a poor credit history. I'm in the process of finalizing that arrangement. So if a lender is willing to lend to somebody with poor financial history 700 grand, and then somebody wants to rent your property for maybe £1,200 a month, and you're saying, oh no, because of a poor financial history, I can't rent you this property, it doesn't make sense to me. Again, if you look at shelter, right, in the order of physiological needs of human beings and individuals, shelter, food, clothing, right, they come in that order of importance or priority. So when somebody has a shelter over their heads, they do everything possible to keep that shelter over their heads. They prioritize it. What it means is that some people let go a lot of luxuries just to be able to pay their rents. So it's a natural reaction for human beings to say, I need shelter first, because with that address I can get a job. With that address I can operate from here. So there is a justification to say that ordinarily, if this person rents this property, they will prioritize the payment of this rent. It is not always the case, but in majority of the cases, that is the case. People prioritize paying their rents and their mortgages over and above everything. In fact, statistics suggest that in some cases, people's rent and mortgages take up 50% or more of their income. So they are willing to spend half of their income to put a roof over their heads. What makes you think that they would jeopardize that and they will prioritize paying credit cards and loans and other things over and above paying their rent? If they can afford to pay their rent, they'll pay their rent first and manage the other finances, in a better way or in a different way. So like I said, it's not always the case, but it's a minority of cases where you see people who don't prioritize paying their rents and their mortgages. So credit report is not the issue here. It is, the order of priorities that things come in, and you as a letting agent or landlord understanding that. Again, credit reports are highly deceptive. Why do I say that? They are highly deceptive when they show credit management. Yes, somebody who has been able to manage their credits very well in the past, there is no guarantee that that person will be a good tenant or will pay their rents on time. It might even be that the person with a clean credit report might be the one who is prioritizing paying their credit cards and their loans off first before paying their rents or their mortgages, because they wouldn't want to get into trouble with their lenders or the financial institutions, because they want to maintain their clean credit reports. Therefore, they might decide or prefer to owe their landlords so that they can maintain their good credit reports and continue their borrowing and their credit lifestyle. That might be the case. I'm not saying that it is. But what I'm saying is that credit reports might be deceptive. You might look at somebody with a very clean credit report, but it might be that the person is prioritizing paying other debts than paying their rents as and when due. So credit reports could be very, very deceptive. Now, credit reports, again, do not show real life situations or real life events. They are just a snapshot of your financial records. Real life situations, where people have been bereaved, real life situations where people have shown themselves to be resilient. They've been out of jobs and then they've been in one second, sorry. they've been out of jobs and they've been able to rise above that situation. They've been made redundant and they've been able to rise above that situation. It doesn't actually show you the level of savings or financial reserves that the person has. People might not be financially buoyant, but they have savings. So when they run into tight financial situations, they will go and dip into their savings and keep on paying their rents until they get back on their feet. So people might be renting and they might come from a very rich background. That if they run into situations where they cannot pay their rent, they have family members who can support in paying their rents until they get back on their feet. These things are not shown on credit reports. But it takes human interaction to understand that these things are real. So it takes human interaction and your human common sense to be able to put those things into consideration. So credit report and having excellent credit report does not always suggest that there is willingness to pay your rent. Again, the other thing about credit report that letting agents and landlords should be careful about using them as basis of assessing tenants is this. There are certain unhealthy lifestyles and habits that people have that credit report doesn't show. Say someone who is into substance abuse, or somebody who is drunk, or is always drunk, or somebody who is into gambling. You don't see these things on credit reports, all right? So what happens is you come into contact with somebody who has this unhealthy lifestyle and habits, and they present a very clean credit report to you, but you haven't seen what is beneath or what is behind them. By the time they enter that property, their gambling lifestyle, their drunken lifestyle, their unhealthy habits of, unhealthy financial habits of gambling and drunkenness and substance abuse might take over their finances, and then you struggle to get your rent from them. Meanwhile, you've done everything, you've assessed them, you've got a clean credit report, but their lifestyle and their habits is not reflected in the credit report. So again, the credit report has failed in identifying things that you could have identified if you did not focus so much on credit reports. Now, credit reports again robs us, if you kind of rely on credit report, what it does is it robs the rental process of the human touch and the human common sense. People tend to be following the computer these days more than following their common sense or their instincts. Yeah, because in the financial institution, these are the things that we battle against, even as mortgage advisors. Lenders tend to, a lot of lenders just follow the computer. No common sense underwriting with some lenders. They just follow the computer, and once the computer says no, they say no. Is that also what the rental property industry is going to turn into? Following the computer, and if the computer says no, we say no. Where is the common sense? So common sense assessment of tenants yields more result and better result than just relying on credit reports, because that human touch, that human common sense, that instinct, that human instinct that you're applying has far more positive outcomes in them than just relying on what the computer is asking you to do to tick off boxes. So poor credit report does not necessarily mean that a person is unable or unwilling to pay their rent. It doesn't necessarily mean that because I have poor credit reports, I do not intend to pay my rent, or I do not have the ability to pay my rent. The poor credit report might just be as a result of life events. Maybe in the past, this person had, issues with their work, and they missed a few payments, they defaulted on a few payments, they entered into an IVA, or they entered into a debt management plan, or they were made bankrupt years ago, but then they've come out of that. They've moved on from there. So why would you want to drag them back into their history and judge them based on their history and say, because of your history, sorry, we cannot rent this property to you? Does it make sense? It doesn't make sense to me. Okay? So, and then credit report, unfortunately, it kind of discriminates against those without a credit history. There are people in this country, especially people who are coming into this country. If you are new into this country, into the UK, you may not have a credit history. So what's going to happen? That's discriminating against people like that who don't even have a credit history. And then saying that, oh, because you don't have a credit history, therefore you cannot rent a property. So it becomes kind of discriminatory. And these things that I have mentioned on why letting agents and landlords should not rely on credit reports when assessing tenants. There are things that I've applied in my own practice as a letting agent. When I'm assessing tenants for landlords or assessing tenants for properties that I manage or I run. Credit report doesn't play a major role in the assessment unless the landlord specifically says to me, I want to see their credit report. But I do everything I can to educate the landlords to say, if you allow me to do these assessments, the way I professionally feel I can, I guarantee you I'm going to get you a good tenant. And it has not failed me. Most of the best tenants that I've had in the properties I manage or I manage on behalf, I have found for landlords, they wasn't based on credit reports. Some of them I didn't even see their credit report, but up to date, they pay their rents as and when due. They do everything possible. They are the best tenants you can ask for. So because we used common sense, and that's why at Modesty Property Consultants, we came into this business to make a difference. And that's the difference we've come to make it, to kind of challenge certain status quos that have existed before now. That, oh, you must do things in this way, No, we don't have to do it in that certain way. We have to use our common sense. And that common sense and instinct has not failed us. Because renting a property is not a credit agreement. We're not loaning anybody anything. We are just there to assess. The right to rent thing from the government is enough work for estate agents and letting agents and landlords, where we have to now check immigration statuses before we rent out this property. That's enough work. Why are we letting ourselves with much more administrative work and not use our common sense to rent properties? So we're not asking estate agents or letting agents or landlords to relax standards of assessment, but credit report does not really take the standard any higher. In fact, as far as I'm concerned, it's an excessive information, because a lot of the information on that credit report are confidential. They are personal. They are people's personal financial information. And when it comes to renting a property, do we really need to dig that deep into people's personal financial details and information to assess whether they can rent a property? Do we really need to do that? If you want to assess tenants' affordability, there are better ways of doing that. Look at their bank statements. Like I talked about lifestyle, their bank statements could tell you a lot about their lifestyles. It could tell you whether they are gambling. It could tell you what they are spending their monies on. It could tell you, the kind of things that they spend money on, to let you to understand who that person is really. Look at their pay slips. Make sure the statements, the bank statements and the entries match what is on the pay slip. Look at their employment references. Make sure that they are gainfully employed and that what they are earning is not, the rent is not more than 50%. It's not going to take more than 50% of their income. Those are the things you will look at. Employability. How long have they been employed for? It gives you an idea of the industry they are in, how long they've been employed for, and their employability. That they've been employed for donkey years doesn't really mean that they're going to be employed forever. Some people might start a new job now, but they have a 12-month contract. That 12 means for the next 12 months, they are guaranteed. So these are the things we use, because I'm bringing my mortgage advisor experience into these things to use it to assess tenants. So I'm acting like an underwriter and looking at these things and making common sense of them. So I hope that this would drive some common sense into some landlords and some agents into believing that tenants could be assessed in a better way, not just using credit report to assess affordability. Thank you very much, and God bless you all, and I'm going to see you guys again next week. Take care and goodbye.